All right. Hello, everyone. Thank you so much for coming to Startup Boston Week. My name is Annie, and I'm one of the organizers for this event. On my screen, bring it up. Sorry, I forgot to do that. So on the screen right now, you'll see the sessions that are happening right now. Currently, you are logged into the Angels and Demons session. So if you were looking to catch the other session, we'll miss you, but feel free to switch over right now through the agenda tab. In the agenda tab, you'll also see all of the amazing events that we have going on for the rest of the day and the rest of the week. While we wait for the last few people to trickle in, just a reminder that we absolutely love and want to hear your questions and have them involved in the panel. So please use our Q&A tab to submit questions. You'll see that on the far right of your screen. Finally, we have an awesome social media competition going on throughout the week. We hope you're already going to be paying very close attention to what the speakers say, but here's a little extra incentive. If you post a quote on social media from this panel or any panel that you attend during Startup Boston and use the hashtag SBW2021, you'll be entered to win one of $500 gift cards to Black-owned Boston business. So without further ado, really looking forward to this panel. I'm sure everyone else is. I'm going to turn it over to Samar Yusuf, our moderator, and we'll go from there. All right, enjoy.
Thank you so much, Hani. And thank you, Startup Boston, for having us. I'm very excited for this panel. An amazing group of speakers y'all able to pull together. So excited to be amongst this group and learn from everybody, and welcome everyone to this panel on Angels and Demons. Hopefully you take away some interesting learnings and insights, and hopefully ways that you can continue to progress through your angel investing career. Quickly introducing myself, then I'll hand it over to the panelists to introduce themselves. My name is Samar Yusuf. Wear a few different hats, first of which I'm Chief of Staff at Black VC, a nonprofit organization committed to making the venture capital industry more diverse and inclusive. We work with a variety of different large venture firms, corporate venture arms. We do advocacy. We do a variety of different educational programs to make increased number of Black venture investors in the industry, increase AUM controlled by those investors, and hopefully move the needle as far as capital mobilizing to Black entrepreneurs. And I'm also managing director of the Investors of Color Network, a consortium of Black, Latinx, and Asian investors across the capital stack, investing in the health, wealth, and social mobility of communities of color. And I'm actually joined here by my co-founder, who I'll hand it off to for the introduction, Betty Francisco.
Good morning, everybody. Thanks, Samar, for the intro and for framing the session. I'm Betty Francisco, and I am a proud co-founder with Samar in the Investors of Color Network. I'm also the CEO of Boston Impact Initiative, which is an impact investment fund focused on investing in regenerative local enterprises in Eastern Massachusetts that are owned by people of color or that are serving communities of color. Our ultimate mission is to close the racial wealth divide in Eastern Mass. And our focus in terms of investing is predominantly in for-profit and nonprofit and cooperative businesses that have some form of worker ownership, ideally have some local impact. And our investments tend to run the gamut across the range of investment types, so debt, equity, as well as grants. And I'll hand it off now to Debbie.
Hi, everyone. Thanks, Betty. I am Debbie Kleiman. I am an entrepreneur, an advisor, a mentor, an educator. I've been working with entrepreneurs in the Boston tech startup ecosystem for over a decade. Most recently, I was running the Entrepreneurship Center at Babson College, where I worked with hundreds of entrepreneurs, early stage entrepreneurs every single year. Early stage entrepreneurs are my passion, and I love working with them. I'm currently running an accelerator program for elite athlete entrepreneurs. So these are elite athletes who have startups, and we're taking them through an early stage accelerator with their companies. And I'm an angel investor. I am part of TBD Angels, which is a wonderful amazing angel network here in the Boston area that was started in Boston, is now national. It's about 250 angels. And I also have my own syndicate under the Upside Angels, where we invest in early stage startups, geography and industry agnostic. I'll give it to Raj.
Thanks, Debbie. So Raj Agarwal, I'm an entrepreneur. I have founded a company called Localytics, which is a mobile analytics and messaging platform. We grew that over 8.5, 9 years, and it was acquired last year. Now working on a project called Oye, which is a customizable virtual event or video chat platform. And if anybody's interested in checking it out, 12:50 today, the Boston Startup Week networking session is going to be on that, so hopefully some of you can join. And I should say I invest more for fun than as a professional. So for us.
Hi, this is Firas Raouf. I'm a general partner and co-founder of Companion Ventures based in Boston. We invest exclusively in B2B software companies. We're industry agnostic and geography agnostic, but very stage specific, in that we invest in companies at what we call a post-seed pre-A stage. So companies that have gone through the early years of trying to find product market fit, trying to understand their target customer, pricing and distribution. And when they get to a point where they're at sort of a 1 to 3 million in ARR, and they're a little too early for a big Series A, that's when we invest. And we bring a consulting team to help our companies basically scale operationally, primarily in go-to-market. And prior to Companion, I was part of the founding team of OpenView Venture Partners here in Boston as well. So I've been a VC for a long time, and before that, I was an entrepreneur.
Great, thank you. Thank you all for your introductions. And I hope the audience can all see why I'm excited about this panel. And before we dive into all the questions, quickly, I'd like to touch base on two things. How did you get into investing, and what are your goals as an investor? And Debbie, we'll kick it off with you.
Great. Thanks, Sammer. I got into investing sort of a little bit accidentally and a little bit on purpose. So the accidental part was that, you know, my first investment was not something I expected to be my first investment, right? It wasn't like this big hullabaloo. It just ended up being a natural extension of the work I was doing with the founder. So I guess that's the by accident part, is that I've been an advisor and a mentor for a really long time to early stage companies. And I just wanted to take my involvement further. There were certain founders that I felt really strongly about, wanted to be a part of their success in a different way, in a supportive way. So, you know, started making small investments in founders that I knew very well and had worked with before, and then moved into more sort of working with a network or a group of angels to, you know, further get access to different kinds of deal flow, not just founders that I knew really well.
Great, thank you for that. Raj?
Yeah, so kind of as alluded to, you know, investing more for fun, and really, you know, kind of like Debbie said, it's started with founders that I knew well, and I kind of just want to be involved in the journey, be involved in some cool things, and my sort of philosophy around it is like, don't overthink it. You find somebody that you believe in, just make a quick decision, expect nothing from that investment, and just be available to be helpful if and when asked.
Thank you. Firas?
Yes, I actually, like I said, over 20 years ago, I was an entrepreneur with a couple of other co-founders. We started 3 companies. 2 of them failed quickly because literally we had no idea what we were doing. And the third one, we got lucky enough that it stuck and started to do well. And we raised a round of expansion capital from Insight Venture Partners, which is based in New York. At the time, they were a smaller fund doing early stage Series A, Series B investing. And as I was about to sort of exit that company, the founder that invested in us from Insight, Scott Maxwell, asked me to join him here in Boston to help him spin out of Insight and start OpenView. And the rationale for him asking me to join him is, he wanted OpenView to be very operationally supportive to the portfolio, and he wanted an entrepreneur by his side to invest. And so that was my entry into venture capital. When I left OpenView in 2014 with the goal of starting my own fund, I spent 2-3 years in the Boston area investing as an angel. Joined Launchpad, and that was my primary vehicle for sort of looking for opportunities to work with entrepreneurs. I still do angel investing on the side myself, but not professionally, because my professional investing is pretty much all companion. So,
well, thank you for that, Betty.
So I started back in 2015. So I'm a corporate lawyer, and a lot of the work that I did as a corporate lawyer was venture capital deals, representing both investors and startups. So I knew all about documenting the transactions, but never really knew the background as to how did these VCs find these companies. How did they set the terms? What's the business deal, basically? And I always wanted to learn that side of it. So back in 2015, I was both launching a kids fitness company, and one day I literally saw an event that the BBJ was doing, where one of the speakers was Natalia Oberti Noguera from Pipeline Angels. And I was sort of like, who is this woman coming to Boston speaking about angel investing and changing the landscape, literally changing the face of angel investing to incorporate more women and people of color as angel investors? So I got to meet her at the time. They were literally recruiting for the program, which is a boot camp to teach women how to become angel investors. So I participated that year, and the program allows you to be part of a cohort of other women that want to be angels. It teaches you the basics of angel investing, everything from, how to do it, how do you do due diligence, how do you evaluate companies that are super early stage, how do you create your own portfolio, how do you set the goals you want as an investor, how do you meet companies, right? How do you create that deal flow that is necessary if you want to do this professionally? Anyway, so our cohort, Boston cohort, invested in a company. After a couple months, you do a pitch competition, you participate in a pitch competition to meet different companies, and you ultimately decide to make an investment. That's literally what got me into angel investing, because it felt very safe. It felt very accessible. I was doing it with a group. So that alone helped de-risk the process for me, right? Because it was scary for me to just go and invest, thousands of dollars in a company, and I didn't know what I was doing. So since then, I've invested in several other companies through Pipeline Angels, which is a fantastic network. This year is actually their last cohort for the program. I've also invested through another angel group, Astia Angels, again, focused on women entrepreneurs. And what I realized is part of my interest and passion for investing is really to create more capital for underserved or new majority entrepreneurs. So entrepreneurs of color, women who traditionally have not been able to access VC funding or even angel investors. So I see myself as sort of being that early stage friends and family, right? Money that a lot of these entrepreneurs typically cannot access. And then I've also invested through a company called Portfolio, which is sort of angel investing made easy, right? So you have full access to diligence. You can see the companies and the pitches that this fund is investing in, but there's an investment committee ultimately making the decisions. And Portfolio also is focused on investing in women entrepreneurs and entrepreneurs of color. So that's my lens and how I come into this. I
think it's really interesting, Betty, what you bring up, though, is that it's easier than ever to become an angel investor. Yes. A lot of the, sort of obstacles or things that made it riskier in the past are not there anymore. There's more people, there's more angel capital, there's more people doing it, there's more education available. There's groups that you can get in and have much lower minimums and still participate, feel like you're still part of, an angel investing group and helping early stage companies that you're really passionate about, whether it's because of the founder or helping underrepresented or whatever it is. You can find a group with your passion, and you can do it for, $2,500 if that's where you feel most comfortable.
And that's been, sort of my advocacy too in this area has been, let's democratize this, right? Like, it is super high risk. So the way you can do that is have other people around you that are smarter than you, right? That can help you access deals, but also teach you at the same time. So yeah, absolutely. There's lots of ways to get into angel investing, and to have impact in the way that you want.
Yeah, I agree. And I think one line of commonality that I heard across your introductions is that there's a very founder-centric approach to the angel investing in the room, whether it's how you started it or your thesis. There is this kind of onus around trying to, like, whether it's you started angel investing because you were already helping a founder and now found another way, right? This capital is another tool, or it's you're passionate about a space or a specific problem and you found somebody that you think is really able to potentially solve it, and you're investing in that future. And I think that may, for those of you that came to the panel looking for demons, you may be a bit disappointed, but I think, generally, hopefully you'll be learning a little bit about it. And what my next follow-up question is really kind of start to dive into what is the role of angel investors. And I think there's a divergence of opinion as far as, your role is to just be helpful, hands-on, support these founders. You are an extension of their team almost to a degree, versus you put that money in, you take a step back, and they'll call you when they need you. Raj, I know you have strong opinions on this topic, so maybe you can get us started.
Yeah, I mean, as an entrepreneur, there's certain folks that I brought on as investors for sort of value add, but when you've got a set of angels, the most important thing is a really fast and easy process, painless, and then get the hell out of the way, right? Like, I'll call you when I need you, but don't ask me for updates midstream, right? I'll do my quarterly, maybe my annual update as well, and ideally, any questions or things are funneled through one individual who's kind of like a lead angel or something. Even like little questions just add overhead to an entrepreneur and are not helpful.
I sort of think about it a little differently, just because of, I guess, where I come at it from. I don't come at it from the entrepreneur's perspective like Raj does. I come from the perspective of being an advisor and sort of taking my commitment up a level. So when I angel invest in a company, I typically do want to have a bit of a role in helping that entrepreneur in a way. I tend to invest in companies where I have an expertise to add. I know something about what they do or their industry or a part of their strategy that they need specific help with. So I do tend to expect to meet with the founder and be involved in decisions in those very early stages. And that's part of the reason why I do it, is because I want sort of that entry into some of the inner workings of what's going on.
And I'm kind of in between that, right? Because the first thing Pipeline Angels taught us was angel capital is smart capital, right? It is money plus your social capital, your relationship capital, opening doors. So I do also tend to invest in things I understand, or where I think I can make an introduction or leverage my network. So for me, I don't get involved really with the business, but rather, can I open a door for that business? It could be a partnership, it could be a customer, it could be some relationship they're trying to build with a municipality, right? So that's where I feel like I can bring my value to that entrepreneur and that startup. And I think, in terms of getting involved, like, I do feel like I don't want to be in the way at all. Like, I could advise, but the entrepreneur, I feel like, knows best. And really my role is to be the door opener.
Yeah. And I guess from my standpoint, just because I don't do angel investing on a sort of full-time basis, but it is very important to me that when I invest as an angel, that I do get updates. And I think it's very a bit disingenuous when, you know, an angel investor gets a lot of love and attention from the founder when they're asking for the money, and as soon as they get the money, you know, out of sight, out of mind. So I think it's sort of for the entrepreneur, for the founder, they owe it to their angel investors to keep them updated and aware of what's going on with the company and with their investment. And so, you know, I've seen founders that do a monthly update, and it's a pretty extensive update that goes out to all the investors. And within that update, they will ask for help, not specifically from a person, but they say, here are the key hires we're looking to hire. Can you help us? Here's some introductions we'd like. And that then is a trigger for me that, you know, I can try to be helpful, or obviously they can reach out to me directly.
Just for me, like I find updates absolutely. Monthly seems a little frequent. I think it adds overhead. Some founders may generally want to do that, and it helps them, give them the forcing function to get their thoughts together. But I feel like you shouldn't be pushing for a monthly update, and you should be fine with quarterly.
Yeah, I think part of it is also just sort of who the entrepreneur is. If they're a really seasoned entrepreneur like Araj, you wouldn't expect them to be sending a monthly update. It wouldn't be, you know, that wouldn't be sort of par for the course. If it's a new entrepreneur or a very small team and they're really just getting started, and I tend to see angels get way more involved in those kind of companies versus, you know, a serial founder who's often running on their next thing, who really knows what they're doing.
I would argue with that point, because one of the best entrepreneurs that I've invested in, who is a serial entrepreneur, and this is his third startup, he sends a monthly update. We didn't ask for it. He just does it. But he does it because he's trying to leverage his network of investors for help. And we don't bother him. We don't ask for it, but it just arrives every month. And it's the same update that the founder provides to the employees. So it's, you know, everyone is seeing it. It's very transparent. It's not overhead for the investors. It's just a way to work a community of people who have a vested interest in the company to try to be helpful.
Yeah, for sure. I mean, that's a smart thing for every entrepreneur to do, is just to make sure you're using your entire cadre of advisors and mentors and investors and anybody you've met along the way. Keep them in the loop, because they may not be useful or important in that moment that you meet them, but they'll be important later. They could potentially open a door later that you didn't even expect. So it's always great to keep everybody you meet along the way involved and kind of up to date in what you're working on.
Yeah, and just like I'd say, defer to the entrepreneur, what their style is. Like, you know, absolutely, it could be more experienced operators. Like one of my mentors early, Don McClagan, who was a very experienced CEO, he did a monthly update. But that didn't work for me. It wasn't sort of my style. So it's not like that's wrong, but defer to the entrepreneur what works for their operating system and flow.
I feel like that's definitely the underlying line here, is that deferring to the entrepreneur and having the entrepreneur drive how they'd like you to engage, right? And so that you're not being too onerous, right? But you're responding to them in a meaningful and timely way, and being able to leverage your network, your knowledge, and expertise. And so I think pivoting actually a little bit for those in the audience that are maybe new to angel investing, that are curious about, you know, how do you get involved with a group? You know, Betty, you touched on Pipeline Angels. And this is a bit of a follow-up question from the Q&A from Karen Walker Beecher around if Pipeline Angels is setting down what she's upset about. Are there other boot camps that you would recommend? And then the follow-up question to it would be, as an angel, like kind of entering the space, you know, how would you advise them in identifying a group or a network to join?
Yeah, I mean, again, it depends on your focus. I've been really focused on women and investing in women and people of color entrepreneurs. So I've tended to go with angel networks that have that thesis, right? So Golden Seeds is one here locally, Astia Angels, which operates across the country, but it's in New York, in Boston. There's, I think, Angels is another. So there's sort of the women-focused funds. There's also Angel Capital Association, right, has a lot of investor education for angels. It's a great resource to tap into. All Raise has some boot camps. SoGal is another
SoGal's a good one.
SoGal's terrific. And then Chloe Capital recently put out a training. It's online. It's all asynchronous, but it's a training for like more VC oriented investing, but it crosses over into angel investing. So there's some really awesome, programs out there and education for investing. But the main thing is to be involved in a network that's actively bringing deals forward. Investors, putting a shameless plug for Investors of Color Network. We also have a monthly syndication call where folks can look at some of the deals that we're putting forth. So I think that's the best way to enter into the space, is get involved with some education, but then also a group that aligns with your values and your thesis.
Debbie, how about you? Do you have any other recommendations and thoughts for folks that are trying to get into angel groups and kind of increase their education?
Yeah, I mean, I think just getting in and starting is a wonderful way to learn. I've learned a ton from my colleagues in TBD. They all come from different backgrounds. They come with different expertise. They come with different levels of experience. And I think we're all bringing something unique to the table, and it creates a great environment. So while it's not a structured program to learn how to angel invest, you're kind of learning as you go, right? You're learning on the job, which sometimes is even better because you're like learning and then you're doing right away. And you're using very practical examples. So what I find is if you can join a group that is really open to educating the members and providing that resource for each other in trying to learn. In my own, the Upside Angels, in my own group, we do specific seminars, webinars with our members to give them education, because that angel group was meant specifically for people who have never, ever angel invested and who actually have no connection to the startup world and are trying to get connected to the startup world. So there's a lot of education involved with that, because they don't even really have knowledge about how to evaluate a startup or how to work with a founder, but they do have a ton of business knowledge and they do have a ton of analytical knowledge that they can apply to being a really helpful, useful angel partner. So I think it depends a lot on the groups you join. You can join some great groups, and then there's definitely, as Betty mentioned, several groups that have like actual boot camps or programs that are structured that you can go through. I know SoGal, the one from SoGal, as Betty mentioned, is terrific and really well regarded.
Yeah, that's really, yeah, definitely. Great resources both of you mentioned, and the Angel Cap Association also just kind of has a repository of information, webinars, actually the webinar series as well. And it kind of dives into a variety of different topics that relate to sourcing, diligence, but again, that's more kind of didactic, right? To Debbie's point, angel investing is such a social sport, like it very much so. A lot of people are brought into it by a friend, a colleague, a trusted mentor, and kind of making that first investment, understanding how to evaluate a company that doesn't have a product yet. It can be nerve-wracking, right? So approaching it with a group that kind of provides that support, and whether it's you want education, whether you just need that social element to it, finding that right group is a good way. And hopefully some of the links that I dropped in the chat as well. TVD Angels, obviously a great resource. The Investors of Color Network as well, for folks interested in that community, is also a resource. And
the other thing is, there's also the online groups, right? There's Angel List, there's what is it, My Crowd, Our Crowd, there's Republic, like there's also the crowdfunding equity, crowdfunding platforms that are another way to get involved, but I don't know that you're going to get as much of the social component to them, but it's a way to get in and do lower amounts so that you can get your feet wet. Just wanted to throw those out there too.
Interestingly enough, there's also, sorry, go ahead, Summer.
No, go ahead.
I was just going to add that there are several, if your college might have one, so depending where you went to college, There are several funds now that are being created by colleges to either fund their student ventures or fund people that are associated with the college in some way, whether it's a professor or student or some other connection. Some of those groups also do provide some education that kind of goes with it because it's connected to a college or a university.
Definitely. Well, thank you both for sharing more of those resources. So you each have very, different investment thesis and kind of the motivation for why you became an angel. Can you talk a little bit about what drove your investment thesis development and any advice for folks that are new to the industry that are trying to figure out where they should be investing? Firas, maybe we could start with you. I believe you're muted.
Sorry. Yeah. So as I mentioned, when I'm investing as an angel, it's as an individual. So just as Raj mentioned, it's mostly investing in the founders more than anything. So it doesn't necessarily follow a thesis, other than the thesis is to try to be helpful to emerging entrepreneurs and trying to get them up and running. When I invest as an angel, I pretty much expect that I probably won't see a return from my investment. So it's not a matter of investing for the sake of returns. It's mostly investing for the sake of being helpful. Yeah, so that's my thesis. It tends to be, solid founders that have a very well thought out, thesis or problem that they're trying to solve, where I feel like they've really thought it through and can execute on it. So.
No, I think Raj, did you have anything to add to that?
No, I won't waste time repeating what Firas said very well. It's probably very similar.
No, that makes sense. So we actually have an interesting question from the audience from Vic Innocent. Excuse me if I pronounced the name wrong. So we talked a little bit about how it's much easier to get into angel investing today, right? With the tools, the websites, the different groups that are available. Can you touch on what are some of the challenges of folks actually getting into angel investing, and more broadly, what are some common pitfalls that they face when they enter the industry? Debbie, would you want to kick us off?
Well, I think there's a lot of competition for deals now. With that more accessibility comes more competition, right? So there are more players in the game. People are, getting in on the same deals. And sometimes, we find ourselves working against the clock. Like, can we get our SPV done before the next guy to get into a certain deal that's really popular or really hot? So that's definitely become harder. The best deals, there's more competition than ever to get in on them. And, obviously there's constraints there. Startups are not or should not be in the business of taking every bit of money that's handed to them. So I think that's become harder. I think, certainly the pandemic made it a little different also because you're meeting founders online. And so on the one hand, that's great because you're able to really spread yourself out nationally versus being connected to a local ecosystem, which has traditionally been the angel investors' MO, is to invest locally so that they can meet with the founder and be involved in those earliest days. Now, you see angels investing nationally because the pandemic made online pitching and online due diligence and all those things easier. But by the same token, it is a little harder to build that relationship online. And, building that relationship is a big part of angel investing that I enjoy personally. So it does take a little longer. It's a little different when you're trying to get to know a founder and a company really well because you're only meeting them online.
Betty, do you have any thoughts on some challenges folks may be experiencing as getting into angel investing and some common pitfalls that they may face?
Yeah, I mean, for me personally, it's been how do you continue to access strong deals, especially in the areas that you want, right? Like I have a focus on women, on ed tech, healthcare / wellness, fintech, right? So those are like the areas that I'm more interested in. So it's where do you find those deals? Like who has them? And then not being sucked into like the sexiness of it, right? Like because oftentimes, you'll hear about like, this is the hottest startup and, you got to get in now. So there's that pressure, the, fear of missing out. And I have to constantly resist that, like, so that decisions, because in the end, it is really, for us said this a number of times, it is about the entrepreneur when it's so early, right? Some of these companies are very early stage, pre-seed, have not totally established product market fit, right? So you're taking a chance on the entrepreneur and you really have to take the time to know them. So, so that, for me, it's the pitfall is don't step into this in a rash way. Don't follow the train, but rather spend the time learning. This is for me, it was also, use this as an opportunity to learn. The other thing is, a pitfall is what are your expectations here? Like, is this about making money? Are you expecting your money back? Can you bear the risk? I've always thought of this as I may completely lose this. Like, I hope I have a win, but I feel so strongly about the founders and these companies and about the solution they're putting into the universe that I want to support that and be part of that story. So, know why you're doing it is another piece for me.
Yeah, I would agree with that. I think you should. Raj, did you have something to say?
Yeah. I was just going to add that I think like the best way to do it is by being a great investor, both to the entrepreneurs and to other investors, because then you're going to have increased deal flow. Other angels, investors are going to want you in deals, and particularly when you bring good deals to them, right? They're going to think of you, and they've got a good deal, they're going to pull you in. And so some of it's like what we've said: start small, start somewhere, be a great investor, pull in other great people when you see something special, and just build that reputation, that network, and then you suddenly just get pulled into stuff that you may not have otherwise.
Yeah,
I love that point. That's a great point. Yeah. Be known for being helpful to everybody, and that will serve you well.
I agree with that 100%. I think something we've seen with the Investors of Color Network, that there's a lot of more values alignment now. I think people seek us out as far as like recognizing the value of having not only like a diverse cap table, but also having folks that represent potentially communities that these founders are selling to, right? And having those customers on the cap table, I think, does provide a lot more intrinsic value. And the volume of deals, I think, is also something that's experienced, I think, across the venture industry. I'm sure Firdaus can also attest to how fast and how much money is just constantly flowing. And yeah, I think it's definitely a balance. You have to kind of balance between these really exciting, hot opportunities that, could be very lucrative and just very interesting, but at the same time, recognizing the process you have to run and not getting pulled into every shining light that's attracting you. Raj, it looked like you may have a follow-up.
The only thing I was going to say, part of being a great investor is also making quick decisions and not like over deliberating. Whether it's a yes or a no, don't give the entrepreneur stress by making them wonder what your position is, because it is stress on the investor. Sorry, on the founder is what I meant.
I agree. So I have a question that's a little bit more tactical, and it's a little bit more about, are you found an entrepreneur that you're really interested in? Now you're thinking about, giving them a term sheet, or maybe they already have a term sheet and you're thinking about investing. What are some like key terms or things that folks are thinking about when they're approaching a negotiation with a startup as an angel investor? And Firdaus, we can start off with you, since you kind of wear the hat of the angel and the VC. I'm sure you have different perspectives on this issue.
Yeah, I mean, as an angel, I tend to not lead. I tend to just go with whatever the company has put together. Maybe there's a lead. Most of my angel investing, it started with Launchpad, where there was Launchpad was the lead there. But most of the time, I'm investing in the company in whatever terms have already been decided. Because again, I'm not investing to look for returns. I'm investing to support the company. So I tend to just, go with whatever they've put together. And if they need someone to lead and put together a term sheet, I tend to shy away from that just because of my priority at Companion. At Companion, it's not angel investing, obviously. It's very much of a VC round. We tend to lead and co-lead. So that's a whole other ball game. If you want to get into that, I'm happy to do that. But yeah.
No, that's helpful. And so maybe at a high level, we kind of just touch on the different elements, or I guess things to consider when a angel investor is looking at a term sheet and just thinking, okay, like what does this actually opportunity look like? Maybe Debbie, what are some things that you just like look for as far as it can be like red flags to avoid, or just like things that that you expect to see on the term sheet when you're making an investment?
Sure. I mean, there are a bunch of different things, and also related to what you were saying before. I mean, some people have feelings about safe notes, which is a convertible instrument like a convertible note. Some people feel differently about investing in companies that are only offering safe notes. Safe notes tend to be much more founder friendly, but I do know some angels that don't like them. I'm not one of them, but it is something that people look at. Is it a safe? Is it a convertible note? Is it a priced round? Typically, they're not priced rounds that early in. You're going to want to look at, whether you have information rights, whether you have pro rata rights. The opportunity to invest in the next round is important. We just at TBD, we just re-upped on a company that we invested in very early on. We re-upped again and came in, but it was because we had that arranged beforehand that if things were going well and we wanted to come back in, we could. So those are some things to look at. I also, when you're using things like convertible notes, or you're going to want to look at the cap. Do you feel like the cap is reasonable? Do you feel like the discount's reasonable? Elements like that, and that goes into, have you diligenced the company enough and the market enough to understand really how big can this get? Are they setting the numbers in such a way that they'll be able to get the next round of capital without having a down round? These are things that you want to keep an eye on, because, there's certain optics to a down round that you don't want, what would be considered a down round, even though it wasn't a priced round, that you don't want to happen to your startup. So it's important to look at those things and just, evaluate, do they look right to you? Do they make sense within the context that, this company is being built, the trends, what the market's doing, what the target customer is doing?
I'll just add in, it depends on how much leverage you have too, right? So if you're a lead investor in a round, you're going to ask for certain things like maybe a board seat or an observer seat to help that company begin to build their board. If you're maybe part of a syndication group or an angel group, you might ask for that. The other thing that when we did our first Pipeline Angels investment, because it was a convertible note, it was already set, right? The terms were already set by somebody else or by the entrepreneur. We wanted to make sure we had pro rata rights. So if they did another round, that we could be allowed to invest in that, and that we had some kind of information rights. So speaking of getting updates, right? The entrepreneur doesn't have to tell you anything. So we wanted to make sure we were going to get the same kinds of updates, financial information, as other investors or as their larger or lead investor. So those are some other things to ask for. Again, not being onerous on the entrepreneur, but just being able to oversee your investment properly, right? Or things that you want to be able to participate again if you really love this company and you want updates.
Yeah, one other thing that we did in the past that I've only done this once, and it's kind of hard to do as an angel, particularly if you're doing it as a syndicate, but the company we were investing in was, 4 white guys. And we said, listen, you've got to bring a woman on the team, like ASAP, or we're not giving you money. Obviously it needs to be a qualified woman, a qualified female, but we weren't about investing in 4 white males when there is a ton of talent out there and they had a role that needed to be filled. We really wanted them to look at, a really strong pipeline of women candidates that we were helping them source, to just make sure that the company was building in the right way. Those are other sort of softer things you need to look at. Like, do you really believe in the company's values and the founder's values? These early days of the company set the tone for what the company is going to be like in the future. And so you really have to get a sense of that beyond the analytical due diligence that you're going to do and the market due diligence you're going to do. Do you really believe these guys or women or this team is going to set the right cultural tone, and do your values align?
So Debbie, that is such a great point that you raised, because so now that I'm in an impact investing firm, we actually have impact covenants in our investments. We don't do it for every investment, but for that example that you just gave, right, where we want this company to move the needle on representation, right, we would ask, again, in alignment with the entrepreneurs, right, have an impact covenant that could be something along the lines that, look, if you haven't changed the composition of your management team or your board by X period of time, again, that we all agree on, then maybe if it's a convertible note, let's say, maybe that interest rate will adjust. It goes up. If you do it, we give you a carrot, it goes down, right, by 0.5 point, let's say. Maybe the discount rate adjusts too. So there's really cool ways to align with the entrepreneurs around the impact that you want that company to make. We do it with some of our companies along the lines also of compensation. So if some companies want to get their average, workers to the average pay for their workers to above a livable wage, right, we might put a carrot in there too. Like if you hit it by this point in time, your interest rate goes down if it's a term loan or a convertible, for example. So there's lots of ways to play with that, but I have not really seen that done in traditional angel investments. It's in the impact space, and I wish we would start to think differently, right, and use these tools that are available.
Mm-hmm. I think that also just kind of ties back into your thesis and kind of goal for investing, right? And how can you, what kind of leverage do you have as an investor to kind of guide the different kinds of covenants you want to put in place, but also that dictates the kind of entrepreneurs that are interested in that kind of capital, right? Who are probably leaning into the impact as well. And so I think it goes hand in hand. So I'm going to pivot a little bit and just thinking about, for folks that are new to the space that are interested in, starting to look at deals, what are some strategies for them to cultivate, deal flow? And we can just start kind of focus at Boston, recognizing this is startup Boston. So any thoughts or ideas or places they all think that folks should start to focus on as they're starting their angel investing journey? And
yeah, I mean, I would,
ahead,
it's hard because we're still in a little bit of this COVID environment where not a lot has started up again in terms of in-person meetings, but, places where I see a lot of companies coming through, right? Like the Capital Network is a great place because they're helping founders access capital. So the Capital Network is a great start. Some of the universities, right? So Babson WinLab, which I actually did back in 2015, is another awesome place to meet women entrepreneurs. Harvard iLab, MIT, like all the universities, major ones, Northeastern have lots of, entrepreneur programs. Mass Ventures is another, Impact Hub, Mass Challenge. E4All, more like accelerators and incubator programs are another great place to look. And again, because I have a focus on women and diverse founders, I gravitate to these particular programs. But there's a whole startup community that you can access all of this through Start Hub Boston. That's a great list.
Yeah, I would agree. I mean, there's so many great organizations that hold events, pitch competitions here in town, and they all went online when the pandemic happened. So you can do them from the comfort of your home. I think one of the best ways to get into angel investing or sort of prepare yourself to get into angel investing is just listen to a ton of pitches. You start to see things and learn things and understand more about how to evaluate startups by listening to a lot of pitches. And you'll start to develop your interests based on that. So the idea is, go to these events, whether they're university-based, Babson WinLab was a great example, but we also have, pitch competitions, rocket pitch competitions, pretty much every college in Boston has a new venture competition of some sort where you're going to see student ventures, and they're usually free and open to the public. So go watch those, go to those and meet those entrepreneurs. You know, things like Techstar demo days or Mass Challenge demo days are great ways to see like lots of really well done startups and start to get involved. So, you know, I think that they're the best way to, you know, start looking at deals and seeing deals if you're not joining a group necessarily is to, you know, start going to some of these events in Boston and digging into our ecosystem here because it's very rich. There's lots going on. It's a group of wonderful people. And then if you're, you know, looking on a more national scale, go into AngelList and look around and see what people are posting on AngelList and start to look at what interests you and follow people on AngelList.
The only thing I might just say is like, and somewhat to intentionally be a little contrarian, but like I think watching too many pitches can be a waste of time. I mean, pitches are very orchestrated and they don't necessarily reflect what's actually behind the company. So I'm always going to find a 15-minute conversation with the founder where I can just ask them questions about their business, see what they really understand and what their real strategy is versus a choreographed pitch, much more effective. And so that combined with like other forms of networking with other angels about what do they see in this company, that's where I would tend to spend my time.
Yeah, I think I think there's probably 2 or 3 different. Well, I guess as an angel, you need to decide what your priority is. If your priority is to invest in founders because you want to be helpful, and again, I go back to the point that an individual and that doesn't have investing experience to do angel investing, you shouldn't expect returns from those investments. Just you know, to be very transparent about it. So if your goal is you have some money to spread around to make investments in founders to be helpful to them and, you know, give them an opportunity that you might or might not have had as an entrepreneur, then I think the resources that were discussed here, listening to pitches, going to networking events, and you know, just being in the ecosystem, I would focus on Boston just because you want to be able to be part of an ecosystem and participate, and then be helpful if they want you to be helpful. If your goal is to invest in, as an angel, in startups to make returns and make money, then I would associate myself with other groups. So I do that as well. So I do invest in very early stage seed investing that doesn't conflict with Companion, but I do it through AngelList. I do it through AngelList because I'm typically looking for other investors or angels, super angels, basically, that are doing all the hard work. They're looking for the companies, they're vetting the companies, they make a decision to invest, and then they look for a syndicate of angels to pull together in an SPV or whatever. And I focus my attention on finding those individuals or those funds that can do the hard work of vetting the deals, and all I'm doing is investing through them. So again, this completely different approach to
The other thing is, like, if you have a relationship with a VC, whether they invested in you before or, you know, you've done some co-investment, that's perhaps going to be the best source of deal flow, because sometimes they're looking to add some angels to a venture round, and now they're doing all the work for you. They're doing the vetting for you. They're probably bringing in high quality deal flow. So again, if you can be a good investor in those and build those relationships and nurture those relationships, bring them some deals once in a while, that's another great way to do it.
And in fact, at Companion, that's exactly what we do. So with every investment we make, whether it's a new investment or a follow-on, we set up a sidecar SPV, and it's open to our LPs who want to double down on certain opportunities, or non-LPs who want to invest alongside us. And our priority for non-LPs are people who can be helpful to our companies. So we welcome that. And it's, you know, a minimum of $10,000. It's not a big investment. It doesn't have to be.
So strategy is make friends with Faraz and ride his coattails.
Yeah, I mean, you know, now that I've been doing this for a little bit of time, like I took the leap recently this year and invested in a venture fund that is led by a person of color. And, you know, and again, it's just another way to keep building, right, on supporting you know, founders that are in the space that you want to be in. And that also, you know, made me realize like it's a space that I don't understand as well, right? So it's like, it's fintech, but it's also AI, cyber. I may not have the expertise, but I really trust this VC, right? And it's another way to get into a field that you may not be totally equipped to be in, but you have experts surrounding you. I do, Sammer. Some folks ask for the resources we talked about to be put in the chat, but I can't figure out how to do it. So can I?
Yeah, I've been posting all the resources into the chat. So yeah, if you have a question, just feel free to scroll through and you'll find all the links that were mentioned. I think final point, kind of just like to respond to Hani, hopping back in, I think although a lot of the tools like AngelList and others are definitely valuable, I think, you know, when you think about angel networks and how those things have evolved historically, you know, that is where the diligence was happening. That is where folks were looking at companies. Now, although I think kind of to be a little bit more contrarian, you know, although I think you can go onto platforms to find investment opportunities, I think there's a lot of value in connecting to these investor groups, some of whom do have pretty robust and intensive diligence processes. And, you know, you can also access good investment opportunities that you can invest in for a financial return as well. You know, I think it doesn't necessarily have to be mutually exclusive as far as where you invest for financial returns and where you invest, say, potentially to support entrepreneurs in Boston or wherever your locality is. I definitely just think it's more about being intentional about identifying key partners, whether they're VCs, other angels, groups, and using that to kind of inform the kind of companies you're looking at. And Hani, are we wrapping up? Should we do final thoughts, or where are we at?
There's 2.5 minutes, so I would say like feel free to maximize what we have. If there are final thoughts, anyone wants to speak up.
Yeah, I think we could probably just go over to kind of just any key takeaways you'd want folks that were listening in to take away from the conversation. Debbie, I see you're already unmuted if you want to start us off.
I think, you know, if you are able to be if you are an accredited investor and you think you have some money you can safely lose, that you're comfortable losing, that you can play with, I think it's a wonderful way to get involved with the startup community, be a supporter, grow your own network. I mean, I've grown my network significantly just by angel investing, you know, beyond all the other advisory and mentorship work I do. It's a great way to grow your network. It's a great way to learn something new. Maybe you're, you know, later in your career and you're looking to learn something new. It's really fun. It's very social, as Sammer mentioned before. And so if you can do it, I would encourage you to do it. A lot of groups these days don't have a lot of hurdles in terms of joining. You know, the fees aren't very large and the minimums aren't very large. So if you feel like you can manage that risk and you are an accredited investor, I highly recommend giving it a shot, because I think you will find it to be fun and enrich your life.
I can jump in quickly. Just like if you're doing it to be helpful, and you see like how much competition there is at seed and even like pre-seed, try to go earlier, right? That's how you're going to really be helpful, is find those folks who are like nascent idea, put something in it, you know, as everyone's expected, don't expect a return. But if you're doing it for that reason, that's the best way, is to find somebody ridiculously early and give them an opportunity to take a shot.
I agree with that. For me, this is an incredible professional opportunity. It's a professional development opportunity to keep growing as a person, but it's also a way to leverage the relationship capital that we all have, right? And to give it literally hand it on a silver platter to an entrepreneur that really, really needs it. So it's just, I think it's important to keep building the ecosystem by sharing our resources, our connections, and our networks, especially with those that don't have that traditional access.
I think we're at time. Sorry, I think we did. I don't know if you have any final thoughts.
No, I said it all. I'm good.
Okay, perfect. Well, thank you all for joining us today. I really appreciate you investing the time and sharing. And yeah, very appreciative starter in Boston also having us. Hani, I'll hand it over to you to close us out.
Awesome. Yeah, thank you all so much for joining us and sharing your expertise and your views. It's been a great panel. Really appreciate the time and like you said, Samer, the time of everyone that tuned in. As I mentioned at the top, we have some other great panels going on throughout the day. So just check out the agenda tab. That's pretty much it for us right now. Thank you, everyone. And for the panelists, you guys can feel free to switch back to backstage and then sign out. All right, have a great day, everyone.
Thanks, everyone. Great job, Samer. Thanks.
Thank you.
Bye, everyone. Great. Enjoyed it.